Good afternoon. My name is Dion de Bruin, and my question to you today is your business ready to attract capital to grow to the next level? This presentation is part of a presentation that I did in conjunction with Brenda from B Advisory Services. The first question to ask is, are you prepared? Somebody much wiser than me once said that luck is where preparedness and opportunity meet. And this cannot be more true for when you are applying for finance. The worst thing in the world is when you want to put your application for finance in because you got a nice big purchase order from a new customer and you are not prepared. You don't have your financials, you don't have your management accounts, your bank statements, and all your supporting documents, and you risk losing the deal because the paperwork is not in order. Don't let this happen to you. Work with your accountant and get your paperwork sorted. The outline of this presentation. I'm going to talk to you about the 4 categories of financing solutions, the 4 questions financiers ask, how to be ready for your finance application, and what is the role of the accountant. The 4 categories of financing solutions. Trade finance. This is financing that relates to providing you with capital to buy stock and sell it on to your clients for you to trade within your specific sector. Asset finance. This obviously deals with acquiring assets that you need in your business. Property finance. This relates to the purchasing of a property or refurbishment or raising capital. And then unsecured lending. Unsecured lending is a business loan not secured by an asset, as is the case for property, asset, or trade finance. Let's look at an example of trade finance. This is a simplistic example. Your situation could be much more complex. Let's say you're a retail shop. You need capital to buy stock from your supplier before your supplier would be prepared to deliver that stock to you. Let's say that takes 5 days. You then need, let's say, another 30 days to sell the stock through to your customers. And for the sake of simplicity, let's assume that your clients are cash buyers. So there's no payment terms and therefore no payment delay. So in this example, the duration of the trade cycle is 35 days. So what's the need? I need capital for 35 days for me to facilitate this trade. Trade finance then provides you with that capital, allows you to go and negotiate with your suppliers because you've got access now to capital to perhaps buy bigger quantities and get some better rates. It also allows you to go and hunt for new customers because you're not hamstrung by a lack of capital. Trade finance is a wonderful way of growing your business. Asset finance. With asset finance, you can finance almost any type of asset. If it's got a registration or a serial number, you can finance it. What's very important, though, is to understand what are the main types of trade finance that's available to you. And here you look at the option of a lease or an outright purchase. A lease is also called a rental. Let's just look at the difference between these 2 types of asset finance. With an outright purchase, it's a loan with which you are going to buy the asset. The asset is going to come onto your balance sheet, as also will the liability, the debt, come onto your balance sheet. To do an outright purchase of an asset, especially if it's a depreciating asset, negatively impedes the solvency of your business. A lease, on the other hand, is where the financier goes and buys the particular asset on their balance sheet and rents the asset to you. This has become very popular, especially for things like IT equipment or office automation equipment. A rental or a lease option has no negative impact on your balance sheet. With an outright purchase, the monthly installment consists of capital that you're paying off plus interest. With a lease, well, it's one fixed amount of money that you pay. With outright purchase, the tax deductibility of an outright purchase arrangement is the interest portion of the monthly repayment plus the depreciation specific to that type of asset. Whilst asset finance in the form of a lease has got to do the cost of finance is the full installment and often also includes things like insurance. You should talk to your accountant before you decide which of these two options is going to be most suitable for your specific needs. Property finance is the most affordable way of raising capital. Property finance, in this case, relates to a commercial or an industrial property. It's different from residential property finance like a home loan. And you can use property finance to purchase a property or to do refurbishment. You might want to refresh your factory, or you might want to install something like renewable energy. And if you've got an asset in the form of a commercial property that has no debt on it, so it's paid off, you can use that commercial property asset as collateral to raise capital. This is the most cost-effective way of raising capital for your business. The last form of financing is an unsecured loan. This is really a personal loan for a business. It's a business loan. You can use this for the money for any purpose. So you could buy stock. For instance, let's say it's a beauty salon and you've been trading for 6 months or longer with a turnover of 30,000 or more per month. You can get access to unsecured lending to buy stock for your business. You could buy assets. You could use that money for working capital. The problem with unsecured lending is it's very expensive. And you should make it your ambition to grow your business so that you can make use of more sophisticated forms of finance. But when you're just starting out, unsecured lending is a means of gaining access to capital, and it is very quick, and the requirements is not so onerous on you when you apply for unsecured lending. So, what are the 4 questions that financiers ask? If you can answer these 4 questions adequately and you can support it with evidence, you can get finance. The 4 questions are: what do you want and why? How are you going to repay the debt? Why should we believe you? And what if you fail? What do you want and why? Well, I need capital to finance a trade, is an example. How are you going to repay the debt? I'm going to generate revenue from filling the purchase order. Why should we believe you? Well, here's my financials. I can show you what my track record looks like. What if you fail? Well, I can sign personal surety in my own capacity for the business's debts, and I can provide you with the purchase order. I can cede the purchase order over to you as collateral. That's a great answer to a financier. If you answer a financier in this way, they're going to not only want to talk to you, they're going to come and look for you and do business with you. How do you make yourself ready for your finance application? Well, it's all about getting all the documents in place. You have to make sure that you've got your audited financials that's less than 6 months old. And those are the list of audited financials. When you're talking about trade finance, your debtors book age analysis is probably one of the most important. Guys, I can't tell you how few businesses actually go and do a proper cash flow forecast and do that on a monthly basis. Do yourself a favor, work with your accountant and make sure that you've got those things in place. It's a great tool to make sure that you run your business. Management accounts is what you will have to provide if your audited financial statements are older than 6 months. With trade finance, very often, my clients submit a debtors book age analysis on a monthly basis to their financiers. And in doing so, they make sure that they've always got their financing in order and they can grow their business. You can also add your business bank account, your shareholder statement of personal assets and liabilities, and the personal bank account statements of the shareholder. This is particularly important for newer businesses. And then a company profile. A company profile should always include details about the group structure in the way of an organogram. Who's the shareholders? Who's the company role players within the company by way of an organogram? And then very importantly, add your risk mitigation strategy. When you're talking about supply chain finance, there can be lots of risks in that supply chain. How are you mitigating those risks? Talk to your accountant about what are the risks that they see in your business and what strategies you can put in place. That is going to sometimes be the difference between financiers wanting to look at your business or wanting not to look at your business. Lastly, I always recommend to people, use something like a cloud-based service like your G Drive linked to your Gmail account to load your documents onto a server. If you do that, it's easy to share that document with your financiers. Make sure that you maintain that information, and that way, when you apply for finance, it's easy. Here's my details. My name is Dion de Bruin. I run this business called Constructum, which is a financial education business. I have a number of my training sessions that I've loaded onto YouTube. So if you're more interested to understand more about trade finance, for instance, type my name into YouTube, trade finance, and you will find the information there. This meeting was co-hosted with Brenda from B Advisory. I can highly recommend Brenda as an accountant that can add so much value to your business and help you to make sure that your business will be finance ready so that you can grow your business to the next level. I wish you all the best. Thank you for tuning in and have a good day.